Hey guys, it's Scott here. Now that we've had a few days to digest Enphase's earnings, I wanted to go over the key takeaways from it and show how they're going to impact this model that I built here. I think the easiest way to go about this is to break it down into two parts, which is the revenue slash guidance, and then from there we can get into the IRA credits slash US manufacturing. So I think the big headline, whatever you want to call it, from the earnings is that Enphase is a busted growth story, right? The reason that I'm not worried about that is I went back as far as 2018 and I compared US revenue to international revenue. The most simple way to show this is an image. So you can see from 2018 to 2023, international growth or international revenue has paled in comparison to US revenue. And I think that people still, in their mind's eye, are still looking at Enphase like it is a US revenue company. But I think that in the very near future, probably the next year, at the rate that we're going, international revenue is going to meet and then surpass US revenue. I think that's what a lot of people are missing from this earnings call is, I mean, yeah, like no two ways about it. The guidance does not look good. But I think that's short term. Time will tell. And I think this is one of the main things to look at going forward is to be tracking what the international revenue is doing rather than the U.S. The U.S. revenue or even the overall revenue. So that being said, let's get into the IRA slash manufacturing updates. We'll start with a quote from Mandy. I'll bring it up on the screen here. You can pause it or you can read this yourself if you'd like. But the key takeaway here is that since the last earnings call, there was a bit of a discrepancy. Management wasn't clear if the IRA credit was going to be recognized in cost of goods sold or if it's going to be recognized as an income tax provision. And now we know that that is going to be recognized as a credit that goes that is deduced from cost of goods sold. So I've made the updates to the model here, as you can see right here, this line here. The other takeaway from this quote is in the last earnings call, Badgery was quoted saying that each microinverter would be basically like a $20 to $30 IRA credit. And you can see here, Maddie tightens this number down to a window of 24 to 28, which a little bit, actually there's 2 points that are a little bit confusing from this. Is one, in that same call, the one we just had, Badgery did mention the $20 to $30 again, but I'm going to go with what Mandy said because I think being the CFO, I think she's probably has her finger on the pulse a little bit better than the CEO might. And the second part that I'm a little bit unclear of is the U.S. produced microinverters compared to the IRA credits. So let's jump down to the manufacturing facilities for the U.S. and then we'll come back to what I'm unclear about. So in the last video that I made, I was a little bit unclear about what exactly was going on with the three U.S. manufacturing facilities. The reason for that is we had a flex presentation, but that kind of contradicted the previous guidance that we had from Q1. What we had from Q1 is that the plan was that in Q2, there was going to be a new manufacturing partner come online. In the second half of the year was going to be two existing partners. So it kind of came as a bit of a surprise when they announced that Flex was producing in Q2. Kind of made me wonder what exactly was going on with this new manufacturing partner, but now we have a bit of clarity from the call that that new manufacturing partner is Foxconn from Wisconsin. Foxconn in Wisconsin, not from, you know what I mean. So it seems like the Flex facility was just opened earlier than scheduled, as far as I can tell. But either way, we do have the confirmation that there were approximately 50,000 microinverters that were produced between the two facilities in Q2. What doesn't make sense now, as I mentioned earlier, as we scroll back up, there was a IRA credit total of 1.6 million. Now, if you take 1.6 million and you divide that by 50,000, the microinverters, you're going to see a number of 32, which doesn't really make sense given the whole 20 to 30 or 24 to $28 per microinverter. So I'm not exactly sure why this number is so much higher. I really don't know. But the number that was quoted for next quarter for the IRA credit, it does seem to be a little bit more on track within that $24 to $28 range. either way, that's what we're going to go with going forward. I mean, to be more specific, we're actually going to go, we'll scroll over to the side, we are going to go with the $25 per US produced micro inverter. And as you can see here, based on, again, more guidance from that same call, is management does seem confident they are going to max out the capacity to end 2024. So that nets us at about, we'll call it like $100 to $125 million IRA credit by the time that the 3 manufacturing facilities are maxed out. So from there, we're going to go to the forward production, and we can kind of get a rough estimate for what kind of updates can be made to the 2026 share price, similar to what we did in the last video. Quick side note, if you guys are enjoying this video, if you guys are getting any value out of this, please give it a thumbs up or a like or whatever app you're on at the moment. It really helps out, and I appreciate it. Thank you. So scrolling down here, it does seem like we are on track to max out the 3 manufacturing facilities at the end of 2024. So we're going to max that out and leave that at the 4.5 million microinverters per quarter going forward. And then from here, we are going to make the assumption that the overall capacity is at full speed at the 10.5 million microinverters per quarter at that point. So if you take all those numbers and kind of have all the formulas feed into each other as they do, we'll scroll down to show the revenue, the earnings, and the free cash flow growth rates. Quick side note is that the average number that we're using for the forward revenue, earnings, and free cash flow growth rates, it goes from the beginning of 2024 onward. The reason that we're going from 2024 forward is because I think that the rest of this year is going to be a period of refining that stability, especially for the States. So I think it's kind of fair to just go 2024 onward and use the averages from those dates. So in this case, it's going to use the average of 12 cells, which represents each quarter going forward. That brings us at 42%, give or take, revenue, 34% earnings growth, and 24% free cash flow growth. So those growth rates are fed into these formulas up above, and if you saw the last video, you'll have a reference of how exactly these formulas are found. In this case, it's these 3, and they feed into the 2026 year-end price target of 270. So as you can see, that's 75% change based on the most recent closing price that we have. I'm recording this on a Sunday, so the price is subject to change a little bit between here and there. But overall, that is kind of my reassessment of Enphase based on the most recent update that we just had. So all that being said, I'm really not too worried about Enphase after this past earnings. I mean, it doesn't look great, and it could get even worse over the next few quarters, especially if the market continues to look at Enphase like it's some American growth story, not realizing that it's an international growth story. I mean, the market could get a bit crazy. I mean, we just saw Tesla at 106, and now it's a bit higher than 106. And if Enphase wants to get treated the same way, I wouldn't be surprised if it dropped below 100 is what I'm saying. But in that kind of scenario, if you have high justification in the company and it has a big sell-off, maybe take advantage of it, maybe not. I'm not the guy to make that decision for you. I'm just here to show you what a bunch of numbers working together will spit out at the end. So I'll leave it there, and I hope you guys enjoyed this video, and I hope you enjoy the rest of your day. We'll talk to you soon. Cheers.